It might feel different this time, because it usually does, but most crises end up in the same way, with just things going back to how they were before. And you needed to live under a rock for the last few weeks to not know about the COVID-19 virus, the impact that's having on the world, and the impact it's having on world share markets, ultimately what impact that's having on your balances with your investments in your KiwiSaver. This has been a really big fall, let's make no bones about that. It's been, but in the last 20 years there's actually only been 3 large falls. Now, 2008, the global financial crisis, and the tech bubble bursting. So we've only had 3 in 20 years. Markets have been going up a lot. So history tells us that markets go up a lot after that crisis happens, that it all goes back to normal again, and it's no different this time. If you were going to buy a company, what would you do? Would you buy it on a high, like it has been for the last few years, or would you buy it on a low, like it is at the present stage? And that's, I suppose, the big thing that fund managers are up to at the moment. They're going out and they're trying to find those cheap companies. They are buying into things as it goes down and as it finds a bottom, to be able to make sure that they've found cheap companies, because those companies really are on sale at the present stage. We've seen very small losses for the last 10 years. Since 2008, the markets have come up and they've been consistently going upwards since then. So you've got your conservative portfolio, which is going to be for someone who's nearing retirement or looking at their first home. A balanced portfolio for someone in their 50s, looking towards retirement, or someone in a growth portfolio who's going to be sort of before 50, who's looking at the long term for an investor. Ultimately, if they're the profiles that you've chosen, it's too late to change now. There's no point trying to mix around your plan and change it when things have gone down, because things are a lot lower now than what they were before. So yes, it's terrible to lose money, but we must be pragmatic that this investment is about the long term.